and talking with Nikhil Chawla, the co-founder at Setu, who's joining us live right here. Hi, Nikhil. Thanks so much. We had last week this massive fintech festival where UPI made all of the, NPCI made these big announcements, whether it was auto pay for UPI, you had WhatsApp saying it wants to take UPI overseas, Amazon Pay talking about how it wants to get into insurance, and of course the mega announcement coming in from Nandan Nilekani as far as Open Credit Enablement Network goes. I want to ask you, why is the OCEN such a game changer? Why is it going to be the UPI moment as far as micro lending goes?
Hi, Nayantara. Thank you so much for having me back on the show. It's a pleasure to be back. So for viewers, the simplest way to understand Oken, which is OCEN, is it's basically an idea that if we can build a standardized layer on top of the legacy loan management systems that exist in various different financial institutions, whether it's bank or whether it's an old NBFC or whether it's a modern day digital lending company, all of them have these different systems that they use to manage credit about their customers. So the idea of Oken is that if you can build a standardized layer on top of this legacy architecture, and then expose this infrastructure to market participants, right? Like the way we did that in UPI. The idea is that this will lead to network effects. So more and more people will be able to participate in this digital credit ecosystem, and they need not go necessarily have the challenges of going and integrating with every financial institution and then realizing that everybody's systems are different. So rather than that, think about this almost like a digital highway, as Rajan Anandan was talking about, which enables any technology company to easily plug in these APIs and start offering credit to their customers. So that's why this Oken is a big deal, because it's this idea that if we can standardize infrastructure, then that leads to network effects. And these are the learnings that we've had with UPI. Because if you think about UPI, it's just mind-boggling because UPI actually works on top of existing bank infrastructures, which have been around for 20, 30 years. So the idea of Oken is something similar, that can we make the existing financial services ecosystem a lot more efficient by bringing standardization.
But you know what? What made UPI also so popular and has made it so popular is the fact that it's so easy and it's safe. Like there's a sense of security when one uses UPI. You've got the three-stage system built in for the UPI. For the OCEN, you're going to have to need, besides standardization, something really smart and intelligent, which is also going to make sure that when you're lending to those that are worthy of getting that credit and that you're going to be repaid. How is that going to work?
Absolutely. It's an excellent question. And I think this is very important because, see, what happened last week, to put it into perspective, was something like when UPI was in 2015, when the API specs for UPI were put out, and then there were implementations, and then there were market participants, and so on and so forth. So Oken is probably in its first baby step, which is the step one is to put out the protocol. Now that this API specs have been published, and since this is an open source spec, any financial institution, whether in India or anywhere else abroad, can actually implement these specs, right? So in the next few months and coming years, I expect a lot of technology companies, partners, banks, and everybody to come together to adopt these specs. So adopting these specs would mean, improving your underwriting engine as a bank, having a modern, digital acquisition channel, building a fintech partnership program. All of these facets have to be also built into it. From this protocol's perspective, the protocol is only saying that, hey, look, if any customer is applying for a loan, the loan application experience should be the same, irrespective of where you apply from and who do you apply to. But it doesn't necessarily solve for who are you giving credit to, or whether do they have enough data, do you understand this, and so on. So the protocol basically allows that innovation layer to the bank and the financial institution, so that they can innovate and build interesting underwriting and risk models to be able to lend to the right set of customers. So the Oken protocol doesn't solve for underwriting or risk by design.
So that would have to be at a much later stage. Right now, we're just trying to improve the interface between the one seeking the loan and the one giving the loan. I take that
Absolutely.
point, and basically also get rid of the whole cumbersome procedure, right? That
Absolutely. I mean,
you
imagine
want to
you would
take
remember, right?
you want to take
Any
a
finance.
loan for a car. You don't necessarily
Yes, you like if you think
go
about
ahead.
your experience as a consumer, so you go through this, even though you're so the process of applying for a loan is actually kind of the same, irrespective of the type of loan that you're applying for, right? So if it's a car loan, maybe you'll have to hypothecate your car. In the case of home, it's probably a home document, or in the case of personal loan, it's probably your bank statements and salary slips. But the application process is kind of very similar, which is you fill up an application form, which goes to the bank. The bank looks at the application, creates an offer, sends you an offer. You accept that offer, and then that's when the bank creates the loan in their systems and makes a disbursement. Oken's kind of this thing is that, hey, can we make this loan application process itself delightful for end customers, so that they don't have to go through this hassle of a lot of paperwork that they keep doing, which is highly inefficient today.
Yeah, I know. It's like when I got a car loan and all the documents I filled, I was like, how do any of these banks have NPAs? But there's so much paperwork to be done and so much due diligence that's done, right? Nikhil, I'll make this my final question to you. So, account aggregators being seen as the next big disruptor. You've explained it so beautifully and, dumbed it down for all of us. My final question, and allow me to ask you this. So when we have,
Sure.
this entire system, the account aggregators, you can have the OCEN and all of that. Um, it's going to be as simple as the UPI, right? It's going to be either like an email address or a number or whatever it is, which will basically have all your information. Basically, that's what it is, right?
No, so let me put it this way, Nayantara. When we keep saying that it's going to be easy, right? It's going to be easy for the end user like you and me, right? So it's going to be easy for you and me as a customer to, as it is today. If you want to pay money to your family, it's very easy for you. But you have to realize that in order to make your life easy, there's a lot of complex orchestration that's happening behind the scenes, right? So whether it's a market ecosystem like a Google Pay, or whether it's the banks, or whether it's NPCI, or whether it's RBI, which has enabled things like UPI to come to place. So the goal of OCEN, or account aggregator, UPI, and all of this has been what? So to basically make digital financial services accessible to every Indian, right? And that's what the opportunity Rajan Anandan was talking about, that for entrepreneurs or founders like us, the opportunity is that, you can build for India on top of these rails. Uh, so when you think about it from that perspective, the goal of all of this infrastructure is to make accelerate financial inclusion through digital, riding on the waves of internet adoption, smartphone adoption, WhatsApp adoption, and so on. So the way I see this is that, our mission for example, as an entrepreneur, our mission is to make financial services accessible and affordable to every Indian. And it's just not just these public rails. You have to do a lot more of the work, which is working with the ecosystem, working with banks, and so on. These protocols enable you to do some things that you were never able to do, right? So I would kind of put it in that context, that on data specifically, I have only one thing to say. Unless we have a data protection bill in India, you and I are continued to going to be at risk with all our personal data. So that has to be done.
That has to be done, and never before than ever now, because when we're working from home, there's
Absolutely.
work product we have on our personal laptops, office laptops, and it's good, and it's going to come in the way. The multinational companies are going to stop giving the business to their Indian offices the way they have been, simply because they're going to be really afraid of this. We're all working from home. They don't know what's going to happen to that data. But that is a conversation, Nikhil. I'm going to leave for another time, and here's an open invitation where we're going to be launching security and work from home campaign, and I look forward to getting you back with that, along with your co-founder, Sahil. But for now, I'd like to thank you for taking the time out to join us here in Startup Central and for really simplifying it for all of our viewers who may not have been able to understand account aggregators, OCEN, OCEN. We've been hearing about all of it the last couple of days. Thanks a lot.
worry.
Really appreciate
Until
it.
it comes to you on
With that,
WhatsApp,
ladies and gentlemen,
you don't
we're
have to
going to
worry
take a short
about it.
commercial break. But thanks again, Nikhil. We're going to take a short commercial break. On the other side, we keep hearing about how bad the delivery business is. Swiggy, for example, just a few days ago said it's back only at 50% of the pre-COVID levels, and they're doing another cost-cutting exercise. Now you've got Jio coming in, you've got Google coming in. What's going to happen? Well, my next guest is fighting the odds and is talking about not just bouncing back to pre-COVID levels, but stabilizing 30% above pre-COVID. $800 million valuation. Grow First founder coming up on the other side.